Chapter 5, Problem 2. This problem is not difficult. This problem is long. And as we have seen time and time again, the hard part of most accounting problems is wading through the accounting babble. So here they're asking us to do 2 years of financial statements. They want us to do 2018, and they want us to do 2019. And the purpose of this is to make sure that you see how one year flows naturally into the other seamlessly. So let's just get started, and like Alice in Wonderland, we'll start at the beginning, and when we come to the end, stop. So the first thing we have to do is issue $10,000 of common stock for cash. Well, they want us to put it on one of these equations, so we'll do that. We got cash, $10,000, and that's common stock. We got the money, the owners earned it, okay? We provided $78,000 worth of services on account. So accounts receivable, $78,000, and they talk about retained earnings. I want you to think of retained earnings as RE, revenue minus expense. This is revenue, so $78,000 revenue. The next transaction, they provided $36,000 of services and received cash. So that's revenue, what we do, what we get for doing what we do, and cash. So $36,000 in cash and $36,000 in revenue. Revenue minus expense, retained earnings. Then we collected $69,000 from our accounts receivable. So from these people up here, they paid us $69,000. So that's cash. So our accounts receivable goes down $69,000. Our cash goes up $69,000. That has nothing to do with revenue or expense. We already recognized that when we earned the money up here. Paid $38,000 worth of salaries for the year. That's an expense. And the magic word there, paid, cash out. Paid $38,000. And that's cash out, and that's an expense. Revenue minus expense, retained earnings. And then last but not least, they said they adjusted the accounting records to reflect the uncollected accounts expense for the year. They estimate that the 5% of the ending balance will be uncollectible. So here we are at the end of the year. Let's total this up real quick. That's $9,000. That's our balance. And accounts receivable. 5% of that is $450. That's a negative. It's a minus that we have to attach to our accounts receivable. And it's an expense. We recognize it as an ordinary business expense. So there's our accounting equation for the first year. We now need to go through and total up those columns, this totals to 77,000. And as usual, I am not doing this in my head. I'm cheating. I have a cheat sheet in front of me because I worked it out in advance. Our common stock is still the 10,000 that we had. And when you do all of this, this works out to 75,550. Part B says prepare an income statement, a statement of changes in stockholders' equity, and a balance sheet and a statement of cash flows for 2018. We'll do that on the next video.